there's talks of stock market collapse, the next Great Depression. There's one unique asset or really investment that is going to be needed no matter where we go, whether we go to hyperinflation or the Great Depression or somewhere just right in between. And we're going to be breaking that down. It's also one of my favorite investments and one of the places I am most excited about. Here to talk about that is my good friend, Justin Hune. He's the creator of Uranium Insider. It's the best newsletter out there for the uranium market and understanding it. I'll link it right there down below. I'm a paying member myself. I'll pin it to the comments in the description so you can check that out. And we'll give a shout out to our sponsor, Vizsla Silver, one of our favorite silver and gold mining stocks. It's Vizsla Silver. And Justin, good to see you.
Good to see you, Jake. How are you?
I'm doing good. I am personally intrigued because you were telling me you just had a really interesting 2-hour conversation with the lead or the buyer for Sprott in the uranium market. And I haven't personally heard about it yet, so I'm excited to hear about it as well. So give me the download.
Sure. Well, we do a 2-hour webinar every month for our members. And we typically will have a CEO of one of the companies that we recommend as our guest. And in this case, we had somebody who works in the industry, and his name is Per Jander. He is the director of WMC Energy. They're basically a nuclear trader. They trade all elements of the fuel cycle, but they're also the trader, or the buyer, I should say, of uranium for Sprott. So when the Sprott Physical Uranium Trust sitting on cash, or they're trading at greater than 1% premium to NAV, and they're raising cash, they're buying pounds, WMC Energy and Per specifically, that's the guy that's out in the market sourcing the pounds. So he has a very unique perspective on the nuclear fuel market. So we spent 2 hours with him yesterday. I'm obviously not going to be able to get into the weeds as much in a short time I have with you today, but I can kind of at least give kind of a 30,000 foot view of what he's seeing and what we're seeing going on in the uranium space, if that sounds all right with you.
Perfect. Please tell me. First of all, I didn't even know that they used an outside source that actually, if they've got $10 million and they buy X amount of pounds. So I didn't even know that. So yeah, that's fascinating point of view from someone that's that in the field. So tell us what he was saying.
Sure. Yeah. And he's an awesome guy. He's really just a great human being. And we had a really, really enjoyable interview with him, but he's been working in the nuclear space for more than 2 decades. He used to work for Cameco, but now he's the director of this trading, this nuclear fuel element trading company, WMC Energy. So basically what's going on right now, to sum it all up in a very simple statement, is the nuclear fuel market is now bifurcating. And this is not something that is unique historically necessarily. In this particular situation, it's obviously being caused by the West cutting off Russia essentially in many different ways due to the conflict in Ukraine. But we had a bifurcated uranium market back in the 90s. And so it's only really within the past couple of decades that we've had this really completely global nuclear fuels market. And it was not the case prior to that. So it's happening again. And the implications of it are very significant on the nuclear fuel market. So to break it down, essentially, Russia they are the largest player globally in both conversion and enrichment. And so really quickly, the fuel cycle is you have the mining of the U3O8, right? The uranium octoxide, U3O8, also known as yellow cake. So you mine the material out of the ground. That's ISR mining, that's underground mining, that's open pit mining. Various different types of processing at that point gets it to the U3O8 stage. Then it goes to a conversion facility where it's converted into a gas, uranium hexafluoride, and it's converted into a gas because that is the form in which it is enriched from. So this UF6, uranium hexafluoride, goes then to an enrichment facility where it is injected into a centrifuge and spun at very high speeds in order to separate the fissile and the non-fissile isotopes of UF6. So the fissile isotope is U235. And when it comes in as natural uranium, which is another name for UF6, It comes in at 0.7%, 0.711% U-235. And that has to be enriched up to, on average, about 4.4% U-235, okay? So that process of separating the isotopes and increasing the amount of the U-235 gets you enriched uranium, or EUP, enriched uranium product. That is then taken and turned into uranium dioxide powder, pressed into pellets, and made into fuel rods and assembled into fuel assemblies that are unique to a specific reactor. Okay, so that's the fuel cycle in a nutshell. What makes the situation interesting is the majority of demand for uranium is coming from the West. Okay, these are the OECD countries. This is America, Canada, and the EU primarily. And so that's about 70% of nuclear energy production, and therefore demand, comes from the West. Okay, we're just going to call it the West. Now, the enrichment capacity of the West is only about 40% of the global total. So there's a huge disconnect between conversion and enrichment capabilities in the West relative to the demand in the West. And now, while we aren't actually seeing official sanctions come from the US or the EU in terms of nuclear fuel from Russia, we already have the RSA, right? The Russian Suspension Agreement in the United States that limits the amount of Russian uranium, but it's still a significant amount. What we are seeing is utilities, both in the EU and in the West generally, not signing new contracts with Russia. Some are considering breaking existing contracts, and I think that's going to happen even more and more, because now we have Canada giving an allowance with a sanction that they have on carrying Russian material in their shipping till the end of 2023. So you have utilities in the US at least saying, okay, we can get our EUP from Russia until the end of 2023, and that's the line in the sand, and we got to figure out the future. So 2023, the end of 2023 is tomorrow as far as the nuclear fuel markets are going, okay? So to wrap this up into, okay, so it takes time to build out conversion and enrichment. You can't just do it overnight, okay? And building out enrichment is expensive. It's about, $1 billion to $1.5 billion US to build out 1 million SWU. And right now there's 27 million SWU in the West, roughly. SWU is separative work unit, or enrichment, essentially. So one thing that can be done, and already is being done, is you can raise the tails assays of enrichment. I know we're geeking out here, but trust me, it gets good. The tails assays of enrichment. So that's the quote unquote waste material, or the leftover material at the end of the enrichment process, right? That has a certain amount still of U-235 in it. So you put the fresh UF6 in at 0.7% U-235, you spin it, enriching the product and getting your EUP out at the other end at 4.4%. And what's left over in the tails material still has a little bit of U-235 in it. And the amount of U-235 that's left in the tails dictates two things: the amount of time and energy it will take to create the desired percentage of EUP on the far end, and the amount of feed needed. Okay, feedstock being UF6, or uranium. So what's happening now, and what is going to continue to happen, is synthetic capacity is being created in enrichment by raising the tails assays. So the enrichers can actually produce more EUP faster by spinning the material for less time. And they do so with the waste material, the tails, having more of the good stuff in it at the end of that process, okay? So the enrichers have been going at 0.18, 0.19-ish U-235 in the tails assay. That's already raised. It has been raised up to 0.24, 0.25. That's a significant change in the demand of uranium, and it's going to keep rising. So all of this is to say, enrichment tails assays are rising, and the underfeeding that has come from enrichment over the past decade, to the tune of 20 to 25 million pounds a year. It's basically the biggest mine on the planet, underfeeding from enrichers. They sell excess UF6 into the spot market, and utilities have been buying that up hand over fist for years and years. That's gone. 25 million pounds gone right now, unavailable, and not going to be available until there's more enrichment capacity, which is years and years and years down the road. So the secondary supply from enrichment is gone, 25 million pounds, okay? And what's happening in addition to that, that's compounding the situation, is this raising of the tails assays by the enrichers they're going to have to overfeed the centrifuges. They need more feedstock. So what we're talking about is a swing in demand for uranium in U3O8 equivalent of 30 to 50 million pounds per year, starting basically now.
So this 30 to 50 million pounds. So here's how I'd summarize it for myself, who is not a fuel cycle nerd like you. And I mean that in an endearing way.
Oh, I appreciate that. I take it as a compliment. Thanks.
Essentially, they're recycling the waste and they can ultimately create more product with this. But to hit that number, you're saying they're going to need to be feeding these reactors a lot more, coupled with this Russian ultimate decline in uranium and enriched uranium. So it's like a perfect storm between all of that. Am I hearing that right?
Yeah, that's sort of right. The demand picture is correct in what you just stated, but as far as utilizing waste material, that's essentially what they were doing. So I think it's important to understand underfeeding. And I know we've geeked out on this a little bit in the past, but I think it's really important to understand that and why we have the situation that we have now. So when enrichers had excess capacity, meaning they had more capacity to enrich than there was in demand from utilities. Okay. So they were able to lower their tails assays way down, down 0.18, 0.17, possibly even lower in the West, and the Russians could spin it down to 0.1, okay, 0.10. So what that means is you don't need as much feed in the front end. Okay. So the lower the tails assay, the less feedstock you need to produce the amount of EUP at the desired percentage of enrichment at the far end of that process. So with low tails assays, what the enrichers could do, because an enricher has a facility with X amount of centrifuges and they can't turn these things off. Okay. They just keep spinning. It's very difficult for them to just stop them spinning based on the engineering, which I don't completely understand, but I do understand that it's expensive and difficult to turn them off. So what they do is they just keep them spinning. And they utilize that excess capacity from those things spinning to do two things. And one is they lower the tails assays because they have that extra capacity. And they make a deal, the contract with the utility for however much EUP at 4.4%, let's say, enrichment. And based on the tails assay and the amount of EUP and the enrichment level of the EUP, that dictates a certain amount of feed of UF6 that has to come in the front end to produce that with that particular calculation. Okay. So if they have extra capacity between the time that they make that contract and the time they're actually enriching the material, what they'll do is the utility has to provide them the UF6 based on the contracted volumes and tails assays, right? So they provide that material. And then if they have this excess capacity, they'll lower the tails below what the contract was at, and they'll use less of the stuff the utility just gave them. So all of a sudden they've got 5% or 10% extra UF6, boom, that hits the spot market. That's
we're in this environment, that's not going to be like last time.
That's gone. That's literally not happening.
This feed increase is needed, coupled with this macro environment we've been talking about for so long.
Correct. So not only is the secondary supply from underfeeding in the West gone, but we now need more feed to produce the same amount of EUP because the tails assays are rising. So overfeeding, going from underfeeding to overfeeding, it's a massive inflection point. This has not happened for a very, very long time because it's basically just been.
When was the last time something like this happened? Like during the last bull market, did this exist? Has this been a thing going on for a decade?
Yeah, I mean, when there's demand from a contracting cycle, you'll see rising SWU prices, you'll see rising tails assays. And so, which requires more feed. And so that happened in the previous bull market, but the situation was different. It wasn't literally a bifurcated market that's causing it.
We didn't have this market where we have such like a supply demand issue like this. We have, you're saying essentially in history, we haven't seen this coupled with how negative the supply demand fundamentals are, especially now that we got the Russia stuff. Am I hearing that right?
Right, exactly. And the only way, okay, so the only way this scenario that I'm describing doesn't happen is if A, they just decide to shut nuclear power plants instead of paying up to keep them running. And that's not a short-term thing. That would be a year or two down the road, right? Or B, the markets magically go back to being normal, like the West will continue to buy from Russia. But what we know now is Western utilities are signing 0 new contracts with Russia. So it's happening. As far as we can tell, and from all of the information that we have, this is actually happening. It's not a prediction, it's already happening.
And is there any estimation on how much more feed would be needed in order to hit that? Did I hear you say earlier something about like 50 million pounds? Was that right? Or is there any estimation on how much would be needed?
50 million pounds, I think, is kind of on the high end of the swing. So it really depends on where the enricher's tails assays end up. I think that we're very highly likely to be higher than 0.3. We could potentially be 0.35 or even higher. If that's the case, we're talking about, 30 to 40 million pounds of increased demand from the West alone.
Wow. Yeah. So, I mean, this is a measurable tick if you're in a scenario where you're mining 130 million, but you're consuming 200, then it becomes a real thing.
Right.
How close are we getting? One of the things here for me, Justin, and for a lot of people that probably listen to my channel regularly, they got introduced to uranium from our conversations. Whereas, you're a lot of the things you talk on are like real uranium specific. And so people got introduced to it. But then you've had this scenario where, inflation, economic crash, the whole macro lens. And so, whether it's tech or commodities, uranium, everybody's just now went bearish, right? But uranium's unique in that it's not gold, it's not tech stocks, it's not silver. It's not oil. It's this thing where we're in like an 80 million pound deficit. It's 100% necessary for the lights to come on. And this deficit has been accruing for many years. So even in the midst of all of this economic chaos, the price of uranium at some point is going to have to shoot, even if Netflix and gold and oil is not. You're getting closer to that. How close are we to it now? How does everything you just discussed fit into this present moment in time at the end of July, based off of what utilities are buying, based off of what's needed?
Yeah, great question. So essentially so I have to, in order to answer that, I have to back up a little bit to just kind of put an end cap on understanding the enrichment situation. And that is that in past years, under quote unquote normal, globalized market conditions, with enrichers having excess capacity, that extra UF6 that was produced, not only from what I described in the underfeeding process, but also they can use excess capacity to re-enrich tails. So they can take their tails material that's sitting at 0.15, 0.16, 0.17, whatever percentage U-235, and re-enrich that back up to 0.711, which then it is natural uranium, again, UF6, and sell that into the market. So both of those underfeeding and tails re-enrichment are sources of UF6. So what utilities have been able to do to a large extent is buy enrichment for uranium. So what you don't have to buy the mined material and send it to the converter and send it to the enricher. You just buy the enriched material, or you just buy the conversion. You just buy the UF6. You can buy UF6 from an enricher You don't have to buy U3O8. You don't have to buy conversion. This is why ConverDyn shut down their Metropolis plant in 2018. That's 10,000. Oh gosh, I forget the capacity. I think it's 10,000 kGU if I remember. That's coming back online next year. We need that back online. That's actually really important because there's kind of a constriction point if we don't have that in conversion, which we need sufficient conversion capacity to allow for the flow of U3O8 through the process. And the enrichers can create that capacity by raising tails, like we just described in overfeeding. But ConverDyn is coming back online next year. Knock on wood. But with that back online, we should have just enough conversion capacity for this all to flow. So utilities have been able to buy UF6 from enrichers or buy straight up enrichment, deal with the enrichers alone, the Russians, for the most part, and ignore the rest of the process, which is why it's been so painful for the price of U3O8. It's why we've had mines shut down, et cetera, because we've had such not only oversupply coming from the previous decade, from demand coming off of Fukushima, Kazatomprom ramping up year over year, et cetera, but enrichment has gone bonkers, and they've been able to underfeed and re-enrich tails for years and years and years, and it's made it abundant and cheap and easy for utilities. And this moment right now is the utilities going, how we've been doing things for the past 5 years, we can't do that anymore. What are we going to do now? Okay, so utilities are figuring this all out. They're figuring out how much conversion capacity they're going to have in 2025, how much enrichment capacity is going to be there in 2025, and what tails assay and how much uranium they're going to need in order to get that. Okay, so that's what the utilities are doing right now, while they're vacationing in the south of France or whatever. Okay, the summer is slow for uranium usually. This year's a little bit different, but it's still relatively slow. There's a bunch of stuff that happens in the autumn. Multiple conferences. We've got the WNA in London in September. We've got a nuclear fuel conference, I believe, in October. And we also have the beginning of the fiscal year for the US utilities, October 1. So there's a lot that happens in the fall with the backdrop of everything I just described, with the further backdrop of nuclear being embraced all over the place because of we just realized it is clean energy. Great. B, we're having an energy crisis and we need it. Okay, so nuclear is having kind of a renaissance right now on top of this unique micro situation with Russian underfeeding being cut off from the West. Okay, so timing. So right now, like I said, utilities are trying to figure out exactly what is going to happen in terms of conversion and enrichment. That picture is becoming more clear. There was a meeting 3 days ago in Washington, D.C., this NEI meeting, and everybody, the who's who of the nuclear fuel cycle and utilities were all there. Okay, so that was a very important meeting. There's a lot of conversation happening around where do we go from here. It's my opinion, based on my understanding of how the utilities operate and what's happening currently in the fuel cycle, that this demand that's currently happening in conversion and enrichment, especially in enrichment, will hit the U3O8 market this year. So we're talking, I would say 6 months is the long end of that rope. And it could be as soon as, let's say, 2 months. So it's very unique in that, to your point, uranium is a completely unique situation and a unique commodity. It really isn't correlated with anything else, although it gets lumped in with other things when the risk is off, right? It gets lumped in with broad markets when we have steep downdrafts. Sometimes it gets lumped in with oil. Just if the money isn't flowing directly into uranium because of uranium fundamentals in that moment, it'll get lumped in with something else. And that has been the case. We've seen base metals, just sell off. When copper sold off really hard, it kind of took uranium with it. When oil sold off, it took uranium with it. When the S&P dropped, 3-4% in a day, it took everything with it. So we're correlated until we're not. And so I'm not a broad market macro specialist. So I do pay attention to it, but I don't spend a lot of time on it because I believe that risk will come back on into the equities markets. Money needs to go somewhere. We've got hedge funds showing big losses on paper, in some cases realized losses for the first half of the year. They're sitting on records amount of cash right now. Hedge funds are sitting on record amounts of cash, record cash. And in order to keep their clients, they need to make up for H1 and H2 somehow. So I believe that money is going to get put into energy and value, and because that's really what is working for the most part on a relative basis. But the situation for uranium is unique, and what's coming is unique. And my confidence is very, very high that it's coming, and it's coming soon. So the fact that we're being correlated with broad market downdrafts in this risk off environment is it's a gift. And I know you talk with Rick Roll, and I know if he was in this discussion right now, he would be grinning like the Cheshire Cat.
Yeah, I'm personally, I've told you, I mean, I'm kind of rooting for short-term equity apocalypse, knowing what's coming. I mean, I'm hoping there's one more like 20 or 30% sell off in uranium stocks before this all happens, because, we're getting close to where the pain from the public is going to get too loud regarding 401ks, stock market inflation, and we have an election coming up too, congressional election coming up. And so I wonder if we're close to that change in the Fed's tone, like maybe that comes after summer ends, like coming into, early fall before the elections. And that kind of also coincides with what you're talking about once fuel buyers come back from the summer, but now coupled with what you described in the fuel cycle, and how that necessity for increased feed, those types of shortages will kind of hit around that same time. It's interesting to kind of see it all converging. Who knows exactly when it is? Is it 30 days, is 60 days, and 90 days? Who knows? But you can kind of see it's almost like two cars going opposite direction, and they're moving towards one another. And I find that kind of interesting there.
For sure. Yeah. Yeah. I mean, what's about to happen, what's currently happening, what's about to happen in the fuel cycle is going to happen regardless of what happens with recessionary, data coming in, or the Fed being hawkish or dovish. What's happening in uranium is going to happen to uranium. Like these plants are not shutting down. The utilities that are going to continue to operate, they need to cover their needs. And nuclear fuel buyers are not listening to the FOMC. They're not following macro analysts on Twitter. They're looking at their operations. They need to buy that fuel, and they need to figure out how to get enrichment and cover their needs in years going forward. So
one thing that's kind of interesting, I'm not sure if I ever text you this or not. I imagine you saw the G7 countries banning buying Russian gold. I probably sent you that article. And I thought first of all, I was surprised by that. I wouldn't have expected gold. But my second thought was, it seems like they're trying to slap sanctions on anything they know they can immediately get away with. And there's no way, if they've decided to ban Russian gold, there's no way they haven't thought about Russian uranium. I mean, it's obviously they've discussed it. If there's like a freaking chalkboard in that room, it's on the list. But my thought when I saw the gold thing was, they know they can't do it with uranium yet, was my opinion. And I would imagine at some point, if they've pretty much thrown everything at the wall in terms of all these various Russian sanctions, but they haven't with uranium. It could be my own cognitive bias or like wishful thinking as an investor in uranium, but it seems like it has to be a conversation, and they also appear to be doing it strategically, in that it's one of the things they haven't done yet. What's your opinion on that?
Yeah, well, at least in the US, they can't cut it off. Like they physically can't do it without destabilizing the grid. I mean, there's some utilities.
And that's why I said it's on the chalkboard, but
right. But with the U.S. has a small amount of SWU. They got 4.7 million SWU, Uranco's facility in New Mexico, and if they are already starting to raise those tails assays and overfeed, so that capacity is going to increase a little bit synthetically through that process. But yeah, with the fact that the Canadian government is giving a pass until the end of 2023, because it's a Canadian shipper that typically brings the fissile material from Russia from the port of St. Petersburg to the States.
They're moving Putin's product on Canadian boats.
Right. And that shipment actually got halted, 3 or 4 weeks ago.
Interesting.
And then I assume that the Canadian government got some pressure from the US government, which is getting pressure from the US utilities and saying, hey, if we don't get this stuff,
right,
the plant's going to be offline in 6 months. So the Canadian government
approval ratings then if that happens.
Yes.
Those boats moving, all right?
Yeah. The EU is better covered. They typically have around 3 years of inventory. That now, given that's across the fuel cycle, they don't have 3 years of enriched uranium. They got 3 years of inventory between U3O8 and UF6 and EUP and fabricated fuel sitting at their facility. So they still need to secure enrichment, and there's the bulk of the Western enrichment is in France. They're also still trying to figure out how to go forward with this, but this is the way forward. The way forward is tails rising, enrichers overfeeding, and it raises the demand for uranium. And so to put in an order of priority, if you're a nuclear utility fuel buyer, priority 1 is fuel fabrication and enrichment. If you don't have enrichment, you don't get your fuel. So you can buy up all the U3O8 you want. If you can't get that converted, enriched, and fabricated, it doesn't matter. So your first priority is securing enrichment. Okay. So that's what's happening right now. Priority 1, fabrication and enrichment. Priority 2, conversion. Priority 3, uranium, U3O8. So we're seeing the first and second step in priority from the utilities. That's happening now. U3O8 is next. And it has to happen. There isn't an option. If you're securing enrichment for whatever year out in the future, 2024, 2025, you're buying enrichment, you're buying an enrichment contract from a Western enricher, and they're selling that contract at 0.3 tails assay, and you need X amount in kilograms of EUP enriched to 4.5%. That dictates a number of UF6 that you're going to need, and that dictates the number of U3O8 you're going to need. So you get that enrichment first, you sign those contracts, tells you how much uranium you need, then you go out and get your uranium. So this year, so far, we've seen 71.5 million pounds of U3O8 signed in long-term contracts. And I believe we're going to break through that 100 million mark, 100 million pounds of U3O8 contracted this year in long-term. And that'll be the first year that it broke over 100 million pounds since 2012. So the contracting cycle, it's starting. It's happening right now. It's happening. And it's slowly happening for U3O8. And it's going to happen much faster once it really kicks into gear. And I believe that's going to happen this autumn.
I'm getting a master class right now. I'm really hoping, especially after this I'm just really hoping there's one more bottom in the market. And like, there's just some, before they go like 400%, that there's just like one more. But yeah. You know how during the crypto booms, like people are like mining Bitcoin in their garage and stuff. Essentially what I should be doing as a side hustle is I should enrich uranium in my garage, right?
Yep, you'll have to invest in some highly technical centrifuges. But yeah, I'm sure you'd have plenty of demand if you could do it.
So let me ask you about US equities. When I started like really taking my interest and also like money allocation into uranium, there was like the storyline of US equities, which, is in some degrees, maybe again, that's like a cognitive bias, or it's like, I want it to happen because it makes sense as an American. So maybe it clouds my investment thesis. And I've heard it also debunked a lot too. And then there was like the conversation about Trump did like the strategic reserves allocation, and then Biden administration's been on board with that seemingly as well. It's one thing that's kind of continued. And people say, oh my God, that's so bullish. And I remember that week or something, you saw equities jump, US equities jump a lot. And then I heard, that debunked, it's really not that much and it won't be that useful. But now there's also some other interesting things, this whole Russian thing. And then you've given us this whole detail on the fuel cycle and the extra needed feed for that. How will this all affect US equities? Will it affect them anymore? Does it make you any more bullish on them? Because, there's not that many of them, right? Especially there's only a couple that are on the major exchanges. If Nancy Pelosi's husband buys $10 million worth, and you see it on a Twitter, Nancy Pelosi's stock account tracker profile, and it's like, Pelosi's husband just bought $10 million of UUU, and then like the next day she's like, we need to increase the allocation of the strategic reserves to $500 trillion. And we need to give it to this contract to UUUU. Obviously I'm just trying to have a little fun, but
Sure.
What do you think about that? Is Nancy Pelosi bullish on this? Is all of this happening make the thesis in the few quote unquote major US producers any better than it was before? Or no?
Yeah, I would say so, but that's not really hinging on an expectation of the federal government doing something to support the miners. I think that there's
the Putin thing, and now this extra needed feed, and then wanting to decrease from Russian. Does that help America?
Yeah, sure. I mean, it's creating uranium demand in the West, and the U.S. is part of the West. So, really, it's definitely bullish for any producers or near-term producers in the West. And I think the U.S. equities, generally speaking, are unique for a couple of reasons. Or I guess I would say that I'm bullish on them for a couple of reasons. And one is there's a bunch of near-term producers, developing companies that are near-term producers in the United States that are on the part of the cost curve that is going to hit. So, they're not the cheapest and they're not the most expensive in terms of all-in sustaining cost to produce uranium. Most of it's ISR. There's some dry mine stuff in Utah that, like Energy Fuels and Consolidated Uranium, like that, they can mine if the price gets there, and Energy Fuels turns on their uranium circuit. Which
where I am at. Where I am. I'm in Utah. I'm gonna.
Oh yeah, it's in your backyard.
Start staking some uranium land.
Your backyard.
Do you think that the utilities could be because of the Putin stuff and things like that, they could be pressured more to? I don't think they're
going to be pressured, but they're just on their own volition going to seek out pounds and jurisdictions they think are going to be safe from geopolitical upheaval.
Does it make you any more bullish on them than you were, say,
Sure, definitely, sure. I mean, we've seen Encore Energy signed a few contracts, U308 contracts. That's obviously good. Peninsula has some legacy contracts still. I think Cameco is in the catbird seat. But you have a bunch of other, you have Peninsula, you have UR Energy, Energy Fuels, Encore, Uranium Energy Corporation. I might be missing one or two. Consolidated Uranium. I mean, they're all kind of right on the cusp. I mean, UR Energy and Energy Fuels have basically been producing a tiny amount of uranium per year.
The other reason I asked too is a lot of those are just OTCs that most people aren't going to buy if the market comes in. But if Nancy Pelosi's husband's buying, she's got a couple options that.
I would suggest if you're wanting to take sizable positions in any of these companies, well, UEC, URG, and Energy Fuels are all in the NYSE, but for the smaller companies, buy them on the TSX. Don't buy them on the OTC.
I'm just curious. Maybe I'm overstating it. Just like if this makes American companies even more interesting than they were 6 months.
Yeah, I think so. I think the case for being long, United States mining companies, uranium mining companies has improved. Just by this bifurcated market, by a focus of Western demand seeking Western supply. And I think, as part of this whole geopolitical realignment, let's call it, it's likely that it's more likely that we'll actually see support from the government for all things domestic production. You know, I don't hold my breath with that statement. I think that the
I think they'll
government in
call it
the
the Putin
States, like,
defense package. This is the Putin defense package. We need $100 trillion, and a chunk of it's going to U.S. uranium companies.
yeah, I think so. I mean, yeah, it's tough. It's tough because in the United States, even if they have, even if some Congress people who write these bills have good intentions with the bill and with some of the elements of the bill, they always get stuffed full of so much pork that, and it's always just so bipartisan. So even if a bill has good intentions, has some good elements in it, they stuff so much in the bill that's just so corrupt. So like I said, I don't hold my breath with that. And I don't want to really get into the politics thing too much.
Putin's defense package, $100 trillion coming soon.
I wouldn't own stocks in any country really based on a presupposition that the government's going to support them with actual funding. You want the government to support of their operations. You want them to be able to get permits. You want them to be able to actually mine. So if you like US equities for that reason, then that's the way to go for it. Not because you think there's going to be X amount of money allocated in some future bill to actually buy uranium from the companies, in my opinion. Yeah.
Right. It'll be interesting to see if there's any increased buying or importance of the U.S. companies, if there ever is a ban on Russian uranium at large. So what have I missed here? Is there anything else important that I missed here besides like maybe a couple punchlines?
Yeah, I think, I obviously probably am coming off very bullish here. And I know that generally speaking, I have been bullish on uranium for years, with the long-term vision of long-term contracting coming back into play, with nuclear's adoption as a clean energy increasing globally. Both of those things are happening. So my expectations on the bullish thesis have essentially come true. The reason I'm not throwing a bunch of disclaimers out there with my bullish language is I feel more confidence than ever in the direction of this market. We just have to get through this risk-off environment that we're in currently. I typically think that equities markets are discounting mechanisms. They're always discounting future expectations. And I believe that we are in a mild recession now in the US. It's probably worse in other places, like in the EU. I think that recession is probably going to get worse before it gets better. But I think that the equities turn before the risk. I think the bottom in the equities comes before the bottom in the economies. Let's say that. And that's just my broad macro prediction with that. And obviously, regardless of what's happening fundamentally, we got to see funds flowing into these things for them to move. We've seen some decent ups and downs within this overall downtrend since last autumn, but we really haven't seen breakout volumes in the past few months. And that's what we're really looking for risk being back on. And I 100% believe that's coming back on. There's a lot of doubt in Sprott and the Sprott vehicle. I think that's misplaced doubt. I think that Sprott is absolutely going to come back with a vengeance in terms of funds flowing into that vehicle.
Is there doubt because, these last few months and everything has sucked, so then people are just like, oh, it's not good now? But because, even without the New York stock listing, we saw how much money they raised and how much they bought in such a short period of time. Is it one of those, I guess you called it a discounting? Is it discounting based off of short-term money flows with this broader market fears?
Yeah, I think so. I don't know at this point how much it has to do with them not getting the NYSE listing. I think the doubt that's coming from retail investors that are making a lot of noise has to do with the vehicle trading at a significant discount to NAV for an extended period of time.
Got it.
So they're sitting on this cash. In theory, they could do a what is it called? An NCIB, a new course.
How much cash do they have right now?
55 million.
Why do you think they're sitting on it? Because it sounds like you're saying some people just want them to buy, Why do you think they're sitting on it?
Well, they could buy uranium, but I don't think they're buying uranium heavily right now because of that discount to NAV. And they're being criticized for not using that cash to buy back shares because of and to try to close that discount to NAV, which I also think that they should do. But I understand, they by them just kind of
I would rather them hold on to the cash, even if it causes more short-term pain in equities or whatnot. I would rather. I just want them to have as much cash as possible when this thing.
Yeah. But I mean, they've already done an amazing job. Spud is 80% owned by institutions. It's an institutional darling. So when volume comes back into that, that's when risk is back on in uranium. And it's absolutely coming back. And it's coming back tomorrow. I don't know. When is the bottom? I don't know. Have we already hit the bottom? I don't know. What I focus on is uranium. I know what's coming for uranium. I believe that the equities markets are going to take notice. So that's kind of the overall thesis here. And, I'm honestly, I'm reminded of like the early part of 2020 when things, I was bullish on uranium then, not as much as I am now. But, the equities markets did not care about positive fundamentals that were coming into individual companies or for the sector at large. And I just kept pounding the table on it. And obviously we saw a big downdraft in March 2020. But, one thing I've highlighted in my podcast that I've been doing as well is this chart of comparing the uranium equities to the metal. Can I share my screen really quick?
Please. I might need to hit this button here. There you go.
Okay, can you see that okay?
Yep.
All right, so this is URNM, aka a basket of uranium miners, relative to UX1, which is the spot price of uranium. So basically, this is a chart of the miners versus the metal. Okay, so now, granted, the metal is up 50% from when the bull market took off. Right, we're sitting at $46 a pound right now, and when the bull market took off, is in the low 30s. So we're up 50% in the metal, and the equities are up since the beginning of the bull market as well. Right, bull market started here, December 2020. Look at where our equities are. The equities are in like week 2 of the bull market relative to the metal. And this last downdraft that we had 2 weeks ago actually filled that gap from September 2020. We were at valuations at the level before the bull market even started. That's how much this pullback has reduced the valuations of the uranium equities relative to the movement of the spot price of uranium. If you just track the spot price, it's obviously in an uptrend. It's a little bit clearer. Let me put a weekly chart. So this is our spot price of uranium. Perfectly healthy uptrend as far as I'm concerned, as far as this graph goes. Spot price is holding up very well for the reasons, if you don't believe why it's holding up well compared to what I've just stated in the past 40 minutes, then you're not paying attention. This is going much, much higher, but the miners relative to the metal, I think, is a very striking chart.
Even without looking at the price chart, I mean, just knowing the supply and demand and what's coming down the road as a way to make sense of this chart we're looking at is interesting. I'm up in the bottom falls here. Just a quick.
Yeah, I know you do. You know what? Honestly, I wouldn't even really care. I know that retail has had a hard time with some of these. What retail investors typically do is they chase when momentum is there, and when
to get back to that high right there. How much of a move in equities is that to get back to that high around November 21? How much of a move if that chart reverted back?
It's basically a doubling from here for URNM, but for the equities. Well, this is relative to the metal, so it's very difficult to say. This uptrend in equities relative to the metal was when the metal was also rising. So that's something to keep in mind. So if URNM actually in this chart goes back to these levels, we're actually probably talking about more than a double for the ETFs. And if you get a double in the ETFs, you get triples or more in the individual mining stocks.
Interesting.
So valuations are cheap here. And I think I'm very confident in what's about to happen, and it's super, super exciting. And I personally love the volatility. I love that there's risk off in the equities markets while the foundation is building, like bubbling up in the basement. It's like, oh, it's so good. I
It's
love
really
these
good that it
moments.
happened, not in the middle of the you know, making week after week all-time highs, and they announced some Russian bans, so uranium shoots up, but on the same day the S&P drops by 10. It's good it didn't happen like that, to be honest. So
I agree.
that's a pretty solid recap there, or pretty solid breakdown.
Yeah.
If you're listening to this, let us know in the comments what you think of today's episode. If you got some other questions, I appreciate this. This is kind of like a master class today.
Yeah. Yeah. My pleasure, man. Yeah, I agree with you. I think it's a good thing that we had the pullback in the equities markets that we've had so far, even if it goes down further, that we've had that now rather than earlier or even later. So this is happening. I mean, we could see a situation where risk comes back onto the equities markets when demand hits the U308 market. If those two things happen at the same time, we're going to see absolutely explosive moves.
That's what I was saying earlier.
Yeah.
It's kind of up the same alley. Who knows what will happen? But, I mean, seeing what's happened, the call for Fed to reverse. I mean, how much longer can they do this? It is kind of lining up with it.
Agreed. Yep. And I know for a fact there's some smart money accumulation happening here. So that's whether or not, the big guys that know this space well and that manage a lot of money, they might see a 10 to 20% downside here, but they see hundreds of percentage to the upside. That's a risk reward that you'll take, especially when risk is off. And it's like, this is a Rick Roll quote. When it's easy to buy, you buy. When it's easy to sell, you sell. When there's volume, when there's sufficient volume and retail's throwing in the towel and giving you shares, you take them. If it's something you believe in fundamentally,
yeah, I mean,
it's
that
a
was
gift.
the biggest regret that I had in March 2020 is I wish I would have had 6 more months of preparation studying not just uranium, but a handful of other commodities. Cause I bought in 2020, but man, I would have bought hundreds of percent more. And that's why I'm hoping that it happens again. So, for everyone listening, obviously Justin's the man, incredible breakdown. If this is interesting to you, he also has his 2-hour webinars every month as well, where he's not having my jokes interrupted. I'm not interrupting with jokes rather, and he's really getting into it. So I recommend you check out Uranium Insider. I'll link it in the comments and in the description right there down below. I'm a member myself, so I suggest you check that out. Justin, is there anything I've missed?
I would just add that anybody that is interested in the service, you can buy a quarterly membership and just join for 3 months, and you get access to everything we've done, including yesterday's webinar, and the replay is up on the website. So you can join right now and go watch it if you're interested in. It's a deep dive. So yeah, you have a shorter term time commitment if you want to just try it out.
So we want to thank you for joining today, Justin. If you enjoyed today's episode or I missed some important things, feel free to let them know in the comments down below. We'll have Justin on again shortly and give us another masterclass recap, and I'll be sure to field some of your comments, questions in the next episode. So make sure you smash the like button on this. Get your bell notifications so you're notified when new episodes are coming out. Be sure to check out Uranium Insider. And Justin, thank you for giving us so much knowledge today.
It's my pleasure. Yeah, good to be with you again, Jake.